Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your financial market update. And this is for Wednesday, the 10th of May, 2017. We're about 4:10 p.m. Central Daylight Time. So as I was walking out the door yesterday, we heard about Comey obviously being fired. The markets go into a frenzy wondering what it all means. And by the end of the day, it doesn't mean very much in the stock indices. It means very little in the metal markets. The dollar's basically unchanged, up 1.5 ticks. The premium that they had at first put into the Japanese yen comes out of the market by the close, and you're down quite a bit of points from the high, at least. And as you take a look at bonds and notes, they too gave up ground. Now, the more interesting aspects of the day had to do with the sustained power in the gasoline as the market got the EIA number and it showed a minor decline. Now, what's important about that is that the API numbers yesterday showed about a 3.5 or a 3.25 million barrel increase in gasoline stocks. This shows a decline. So today the market's looking for that first decline period because maybe it's a trend. It goes up, and of course, if gasoline's going up, refiners can make more money. They might bid on the crude. It goes up. And the forecast in the weather is showing warmth. Now, not heat, but back, if you look at the 10-day forecast, at least for the Midwest, I'm not talking Chicago, but for the general Midwest, warming up. So that all comes together and looks good. So an interesting day, to say the least. And, of course, we know that the situation with the firing of FBI Director Comey, that's not going to go away anytime soon. We're going to hear about calls going forward, of course, for special prosecutors. Trump did this wrong, Trump did that wrong, whatever. Now we go to the charts, and that's what I care about. I think that I should put on the charts the presidential election so you get a feel for what happened. That was the night that the markets came down hard because of the win by President Trump over Hillary Clinton. And again, the market takes off, and it hasn't really stopped on a weekly basis. I think you'd agree with me. Overall, it's just been a massive climb in the market. When we go to an area chart of closes, the market has gone up, and as you can see right now, it's down a fraction from the all-time high. Not too bad. It held on. And as you can see, you had an inside trading day today. Now, an inside day means that the market didn't take out yesterday's highs or lows, and it's often looked at by analysts as being a pause. Now, the question is that pause before the market's going to resume its uptrend, or does it mean something else? So many traders are talking about the VIX, and they're trying to scare you into thinking that low volatility portends a big market break. I don't know that that's the case at all. I wonder if there's new phenomena, social media, other things, traders more astute about the market, and maybe we're just getting to the point where the market is quiet. But admittedly, on all the stock indices, when's the last time we had a 1% move? And that is unusual. In any case, an inside day. Does it change the trend? No. You still have a pattern of consistently higher lows and higher highs. That is the definition of an uptrend. In order to break that on the current chart formation, you'd have to take out 56.0375, basically a 75-point decline in the market. When we look at where the moving averages are, the market is still well over that average, and this average isn't even close yet to where the swing line low is, so there's time for this market to basically go sideways to let that average get closer to prices. In terms of Bollinger Bands, I don't think they're in play. And the reason I don't think they're in play is with this type of action, they're so far away. From here, you'd have to rally 75 points, about the same amount you'd have to drop to get to the 18-day average, that I think the market's just content looking at this action right now and staying that way. And as long as you have the embedded reading the market should be well supported on breaks. When the red line closes under 80, that will be the warning sign that the price and the 18-day average are likely to come together. When you come to the June E-mini Dow Jones, you've got an embedded reading, not as well locked in as that of the NASDAQ, but frankly, the NASDAQ's been the poster child of the rally. But this is still bullish. The market on this break, trying to hang in there. The question is, what does it do? Does this chart look as good as the NASDAQ? It can't, because you got a lower low and a higher high. There's really no trend at work here. You've got the embedded reading. If it gets back under 80, look for prices to get back to the 18-day average of closes. The S&P's also got an embedded reading, but unlike the Dow, it's more reminiscent of what's going on in the NASDAQ, so I'll call the chart picture stronger. This market did close higher on the day. If it can take out today's highs and or just not take out today's lows tomorrow, you could then get the pattern of higher lows. You've already got the higher high. Could this market make a run at the upper Bollinger Band? Yes, it's close enough where it's in play. It's only really 15 points away or so, so that stays in play. And you've got to keep your eye on the embedded reading in case that starts faltering. Now, the market that has been just churning along the 18-day average with momentum pointing down is the Russell. Keep your eye on the Russell. It should not take out today's lows in the next two trading sessions. If it does, it maybe that's going to spell bad news for the other indices as well. If, on the other hand, this market stays as it is and can take out ideally 1403.30, it joins the bull parade with the other markets. You'd have a pattern of higher lows and then higher highs. What do you have now? You've got this pattern of lower highs and now higher lows. So you're just narrowing in like that. Nothing to do there. And as I said, momentum is still pointing down. The market is trendless in terms of the swing line. It has upside bias because it's over the 18-day average, but momentum is pointing down, what I'll call confused. In the VIX finally got a bounce, but because you have an embedded reading, if you're a VIX trader, these are numbers that are likely to get sold, not bought. You've had a bearish crossover in the market, so ideally what you want to see is the market roll and start getting back through 956 to keep the trend going down, which is bullish the stock indices. If the market rallies up over 1124, that could negate, well, first of all, it can't negate the swing line, but it could negate the embedded reading. The swing line has no trend. The market is downside bias. In the 30-year bond, the market has got a pattern of lower highs, lower lows. Today's break carried the market right into the 100-day average, just shy of the lower Bollinger Band, which it hit yesterday. So the trend is down. The question is, it's embedding its slow stochastic. This is suddenly the part of the curve yield that is locking in and looking for higher rates coming. So that rally that we had into mid-month where everybody was saying, interest rates, why aren't they dropping? Well, that pattern is broken now in the long term, and it's actually, you can see it even in 20-year and furthers because of what the ETF is doing. It too is breaking down, and when we go to the 10-year note, you see that picture, but it is oversold, clearly in a downtrend, riding the lower Bollinger Band, but not embedded yet. In the dollar index, you came out of your downtrend when you had this big rally in the market. Today's attempt to break this market was most interesting. Last night when you heard that FBI Director Comey was fired, the market immediately broke. It didn't rally. And then it spent the day rallying back here to the point where it gained on the day by the very end. So a fairly nice performance on the day. Didn't quite get back to the 18-day average of closes, but in that zone. It missed it by 7 points. Momentum still pointing up, bias up, but I will call the market trendless at this point. In the euro currency, it's the flip-flop of the dollar. First thing, you lost the embedded reading. And when you lose an embedded reading, you had it there, you lost it here Tuesday. When that occurs, price and the 18-day average often come together. They came together right there, and that's where the market pretty much stopped. Number two, the market does not have a trend on the swing line. The close today is over the 18-day average of closes, but the swing line's down, and momentum, you're in an overbought condition that is downward correcting so it gets out of the overbought numbers. In order to do that, you've got to get the D line, which is the blue line, under 70. So a confused market as well. British pound, I didn't like the close today. The market lost the embedded reading. Now, when can you get back the embedded reading? There's two ways. You can either get it back the very next day by the market getting a good rally to it, or it has to rebuild the whole cycle if it can't do it the day after it loses it. Most time, once you lose it, most times, the market doesn't re-embed. But when it does, it's also a sign that the market is probably internally weakened at that point, looking for something new to figure out what's going to drive the market. At this point, if prices were to take out this 129.10 level, you could end up with lower highs, lower lows, which would set up and it does already set up a challenge of 128.81 since you lost the embedded reading. Tomorrow's going to be an important day. Japanese yen stays in the bear camp, and notice, since you've had this embedded reading, how the market has just been riding itself down. I don't see a change in it with one exception. Whenever you first get under the 100-day average of closes, you'll often see the market on many patterns tries to challenge that. Now here it had been under it. Then it got over it and it stayed a long time. So maybe this is a major change. But more times than not, when you get there, you can get a rally back to that 100-day average. In this case, even if you did, because you have the embedded number, as long as it stays embedded, it's just still a selling opportunity until that is lost. In the crude oil, once you lose the embedded reading, which you've done here, and you lost that reading, folks, Tuesday and yesterday. So the day before Tuesday, you lost it here, you lost it here. It's 3 days lost. Ideally, price in the 18-day average make their run at each other, and that's what I think is going on right now. Is there a trend here? There is not. There's a downside bias because you're under the 18-day average, but the swing line is bullish. You got higher lows, higher highs, and momentum is oversold, pointing to the upside, trying to climb. Last, gasoline. Now you have a pattern of higher lows, higher highs. What I think the bulls will do is they're going to say to themselves, unless this market takes out today's low of 148.05, the market may have even put in a spring low. They'll hope for that because you're always looking for that spring driving to kick in, and 158.21 certainly becomes a potential target. Is the market in a buying mode the way that I teach trading? It isn't, because it's under the 18-day average of closes. Obviously, the market's now in a low enough number. We'll see if it can get that momentum going. Last, the natural gas. I've been telling you, you're just churning in this pattern here. I look for a breakout ultimately to the upside because more times than not, in the summer months, you get hot and the natural gas demand picks up. Got it? And now we're already looking at 10-day forecasts that are warming up on us. I know in the Chicago area, in the Midwest, we're talking getting back into the 70s and staying there for a longer period of time. And the market's paying attention to that, and it suddenly came alive. It needs hot weather, though, to really get anything going. Mild weather doesn't draw that much. You need the East Coast to get warm. You need the Midwest. Obviously, you're going to be warm anyways in the South. You're going to be warm in the desert areas. We know that. So it's the big population areas that you're looking at right now. When they come alive, this market comes alive as well. So you put it all together and you get ideas. But from those ideas, there's also seasonal patterns. Do seasonal patterns always work? Let me answer for you this way. Absolutely not. Nothing necessarily works all the time. But seasonal patterns, if they're based on fundamental demand supply, yes, they can get thrown out, but they're there. Think of it. You plant grains, okay? Yeah, you can get too much rain, blah, blah. They get washed out, so markets get bounces. But once the crops get going and they look okay, prices tend to drop. Well, natural gas. Market's got an awful big supply of it right now. Market's looking for hot weather to get rid of it, called a seasonal trade. You put that together, you can read about it on the more research. Are there any buy and sell signals that they've got? And they do write about them. They'll give you the odds of it. And these are interactive charts. You can look at bull years, bear years, try to figure out what it is, and remove one from the other. They're interactive charts. You get it free. just a 2-week trial. Call us. Go to our website. You'll see a carousel of free offers. It's up there. You can click up here. If you're watching me on YouTube, this icon will bring you right to our form. Or under us to get to that form, it'll say click here for Ira's free offers on many websites. Click there. Away you go. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.